Welcome to Screw the Commute, the entrepreneurial podcast dedicated to getting you out of the car and into the money. With your host, lifelong entrepreneur and multimillionaire, Tom Antion.
Hey everybody, it's Tom here with episode 1080 of Screw the Commute podcast. Today we're going to talk about paying your mortgage off early. Now, if you don't have a mortgage, this may not apply to you, but it's something you want to think about when you do get one. Hope you didn't miss episode 1079. That was the ins and outs of charitable donations to get yourself tax deductions and do some good in the world. And make sure you pick up a copy of our automation ebook at screwthecommute.com/automate free. Make sure you get version 3.0. That's the latest. And check out my mentor program at greatinternetmarketingtraining.com and my school at imtcva.org. Hey, I always have to say this because it's certified to operate by Chev, and they demand that I say that. Okay, that's the State Council on Higher Education in Virginia, but you don't have to be in Virginia because it's quality distance learning. All right, let me tell you about the numbers here to make you really think about this. Now, I saved around $200,000 in mortgage interest by paying my mortgage off 5 years early. Now, had I been thinking about it years and years ago, I was flying all over the world, speaking and doing, 70 to 80 new students every couple months. And, so I wasn't really thinking about it. But had I thought about it earlier, like I'm trying to convince you to think about, I would have saved about $350,000 in interest. All right. So today I'm going to give you a quick pros and cons list of paying things off early. Of course, mortgages rarely have a prepayment penalty for paying it off early, so you don't have to usually worry about that. And again, all this kind of stuff, you always check with your tax advisor and your financial advisor rather than just listening to me. All right, so what's the pros and cons of paying your mortgage off early? And I got to tell you, I'd rather have that interest money in my bank account than theirs, right? So some mortgage company. So anyway, one of the big pros is you'll save interest. And it can be enormous amounts just by adding a little bit extra to your principal payment each month. And one of the the newer the mortgage, the more you're going to save because interest is usually what they call front loaded. At the end of my mortgage, it might have been a $5,000 mortgage payment, but I paid $70 in interest for that month. But in the beginning, I might have paid $4,000 in interest. All right, so the more you can knock the principal down in the beginning, the better. But it can be as little as $100 extra a month or $50. It depends. Anything is better than nothing to keep knocking it down faster if you can afford to. So it saves interest. Now, one of the pros is in the long run, it increases cash flow. But kind of along with that, in the short run, it reduces cash flow because you're paying more money into your mortgage every month, so it kind of reduces your cash flow. But once you get to the point where it's paid off, man, it's really great. And that brings in one of the big pros is the psychological part of it. It's just, I've been consumer debt-free for a long time. It doesn't mean I don't have any loans because I have some rental properties and things, and I want to keep mortgages on those properties and just take advantage of the cash flow. But it just feels so great to not be under the gun on mortgage payments. Now the other, when we get to the cons, you do have to keep track of your taxes and insurance, which is normally the mortgage company takes care of that for you while you're during your mortgage. But anyway, another thing is if business slows down or I just feel like taking a break, in the last couple years, I've been just doing a lot of my own fun stuff and just taking the money from the business, not pushing real hard. You don't have to worry so much if that thing is off your plate. And if you are paying extra monthly and you have a long way to go on your mortgage, you don't have to do it every month if something comes up where you need the money. It's just every little bit that you can chip down especially near the beginning, the better off you are. All right, so what are the cons? Well, let's say you locked in, you got a mortgage a while back and you locked in 3% or something. Well, you can usually do better than that by investing. I mean, even some of the higher interest CDs and things will pay 4%. You got to watch for those kinds of deals. But if you invest in your business and you can get 9, 10, 15, 30%, well, it's better off to use the money to invest rather than pay it down on a mortgage if you have a real low mortgage interest rate. So that's a con. If you're paying all the money into the mortgage, you don't have that money to invest. And then your money is locked up in your equity in your home or business or whatever you're mortgaged on. So you can't access it easily unless you get like a HELOC or a home equity line of credit. I think that's what it stands for. Or second mortgages, things like that, which are usually higher interest rates. So you do tie up money in equity. Another thing that a lot of people don't think of is you lose your inflation advantage. Now, most people don't think inflation has advantage, in the same sentence, those words, inflation and advantage. However, in this case, if you don't pay your mortgage off, or if you do pay your mortgage off, you're paying it in dollars that are worth more than they might be down the road if you keep the mortgage and pay it off later in dollars it's the same mortgage payment unless you got one of those variable ones, which is very dangerous to do. But you're paying it off in dollars that are worth less, even though you're paying the same amount. That's called the inflation advantage. So to me, that one's I'd rather have the psychological advantage of not having any debt and not being under pressure to make big payments every month. So that's some of the cons of paying it off early, but something you want to consider because it can, like I said, save you. In my case, it saved me about $200,000 in interest just by paying it off early, 5 years early. Pay 10 years early, boy, it could be even way more than the $350,000. But again, like I said, I wasn't thinking about it in those days, but I had the cash flow. That's why I look back and say, man, I messed up because the cash flow was already there. It's just that I just, dutifully paid the mortgage payment every month and didn't think about this because I was so busy running the business and taking care of students and traveling all the time. So if you have some cash flow, it may be a really good idea for you to do this. But again, check with your financial advisor. Look at all these pros and cons because all of this is where you are in life. Is it a new mortgage? Is it an older mortgage? What's the interest rate? What's your cash flow now? What's your cash flow likely to be in the future? Are you getting ready to retire? Or are you just starting your career or in your mid-level career? See, all of these are factors. But it's something I really want you to bring up because it can save you a boatload of money in the long run. And if you're not hurting in the short run for money, it may bring you back a return way bigger than you could have gotten. So that's my story, and I'm sticking to it. If you like help on this and a million other things it takes to be successful in business, check out greatinternetmarketingtraining.com. That's my mentor program. And if you're in my mentor program, you get a scholarship to my school, the only licensed dedicated internet and digital marketing school in the country, probably the world. And it's quality distance learning, so it can be done in conjunction if you're working, if your kids are already enrolled in a 4-year, concentration camp. I mean, 4-year college. I mean, I'm just so against the 4-year colleges now as they just teach you how to protest. But anyway, it can be done in conjunction with that, or you can skip that and save yourself a boatload of money and have an actual skill that's in high demand. So check that out at imtcva.org and contact me. I'm easy to get along with or to get a hold of, and there's no high pressure here. I'll be glad to answer any of your questions with no pressure. All right, that's my story, and I'm sticking to it. We'll catch you on the next episode. See you later.